That's right. On all of these points, Greece has turned the corner. They managed to reach those very key targets. However, there's a lot of work to be done, primarily because productivity is still very low, unemployment is still very high, off the 28% highs, but still exceptionally high. The overall sentiment, consumer sentiment, has been low. From the banking sector, the banks themselves have not been able to deal with their balance sheets yet. There's a lot of NPLs in the market, which there have been some gradual, at a glacial pace, gradual developments taking place to package, repackage, and sell those. But still, there's a lot of issues in terms of providing credit for the all-important investment.
It's interesting that you bring up the banks, actually, because we do spend a lot of time analyzing yields and where yields are, and obviously that makes sense from a public debt financing standpoint. But then the equity markets really haven't enjoyed much of a rally at all. Technically, the Greek market is still in a bear territory, so in correction mode. We've got the banks bearing the brunt of that. What do you think turns that around? Is sentiment going to turn around because of what happened yesterday in the Greece formal exit, or is it just symbolic? I think
in order to turn this around, you need to think two things. One is ownership. We need to see some ownership of these structural reforms which need to take place. Whether this is going to be ownership from the current government under PM Tsipras, or potentially if there's an election and new democracy were to come in from the next party. There's still going to be uncertainty in terms of the elections. The elections are not due for another year, but prior to the devastating developments with the fires in Athens, there were expectations of elections later on this year. And I'm still holding on to that. I think it'll be easier for PM Tsipras to go to the ballot box earlier, towards the end of this year. But this, again, will create some potential
uncertainty. You say that, Thanos, because he's trailing New Democracy by 13 points. Why would he call an election at this side of the year?
Because I believe that next year things may become a little bit tougher and less sanctioned and less sort of structural reforms are taking place. And it'd be easier for him, I think, to get the benefit of the improving economic environment, as we've seen, the 2% growth rate, than risk pursuing more structural reforms next year.
And so just taking a step back away from the politics, because clearly that's going to be a focal point of the next 12 months, what do you think the catalyst will be for the Greece issue to flare up again? Apart from dragging their feet a little bit on structural reforms in the short term?
I don't think it'll flare up in the short term meaning over the next couple of years. They do not need to get into the markets. They've got the extension of the repayments, they've got the cash, so it will not flare up. And I think that this is an act of policy to avoid any further uncertainty surrounding the Euro project, especially with Brexit negotiations also taking place. So I'm not worried that this will flare up. But there's an opportunity which could be missed if these structural reforms are not enacted and ownership is not taken for the next moves over the next year.
As the IMF keeps saying, fix the roof while the sun is shining. So how are you thinking more broadly about Europe here? So we've got one tail risk for the time being put to the side with Greece. Are you worried about Italy? Could that be the next big elephant in the room?
Well, if we look at Italy and the way that the NPL markets and the way Italy has been dealing with the NPL markets, it was way ahead of the curve. Yes, in terms of the volume of NPL markets, they're quite huge, but they've had a process in place. They've been packaging and selling the NPLs. So the bank balance sheets have been improving. Political developments clearly are going to be an uncertainty. So that is something which we'll be focusing on quite closely over the next 12 months. But from an economic perspective, I'd be still sort of more worried about Greece turning the corner than Italy.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.